Hello, good morning. Welcome to our panel, and our topic is the new paradigm of application investment. And today, I'm the moderator. I'm Yukun from Amber EC, which is a new business line of Amber Group. And today, first we will give a brief introduction and to our panelists, and then maybe we have three topics to discuss, and then let's have a quick begin. First round, let's have a brief intro of our panelists. We follow the sitting order. First is Alan.
All right. Hey, guys. My name is Alan. I'm the founder of EVG. EVG is basically a holding company that builds and operates product. We have about 300 people right now in the group. Majority of the team are engineers. We build from anywhere from financial, like fintech infrastructure, to media companies, to also like content-related sectors as well. And apart from that, we also invest from our balance sheets into different funds and also different companies in different stage. We've so far taken position in more than 100 funds, equity companies, and token projects across the world. Yeah.
Thank you, Alan. Xiao.
Hello, everyone. I'm Xiao from Hashkey Capital, which is one of the subsidiary of the co-host Hashkey Group. So Hashkey Capital is the asset management arm of the whole Hashkey Group, and we started our business with venture investment, and dates back to 2018. Since the inception, we've been managing 3 venture funds, and total AUM is around $1 billion US, depending on the market. And so far, we've already built a very large ecosystem with more than 400 portfolios, and we're still actively deploying, even in this market. And yeah, happy to be here and discuss all the topics with the other panelists.
Thanks, Xiao. Let's Calvin.
Hi everyone, this is Calvin from Spartan. We're a fund founded back in 2017, based out of Asia. We have 3 business arms. We have an advisory arm, an investment arm, as well as a venture studio. When it comes to the asset management arm, we have 3 funds. We have a hedge fund, a DeFi-focused fund, as well as a gaming-focused fund. Really excited to be here to share some thoughts on new dApps and new investment thesis.
Thank you, Calvin. In past years, I think our industry has made many significant challenges, and there are so many changes, especially for the VC's role. And we made the communities different voice, and the regulatories different change, and also the newly cutting-edge technologies like AI. So today we might focus on these 3 topics, and we think we can one by one talk about what we think our strategy, our methodology, and how we can promote a new paradigm of coming waves of application endorsement. First, I think our first topic is we call it redefine the VC's value, communities' perspectives, and the new role of VCs. Actually, I fully believe that VC play a very important role in the whole crypto industry since I remember 2017? Yeah, 2017 to I think the past 2 cycles, the VCs play a very important role in the to find high potential crypto ideas and to products and promote their have a massive adoption. But with time now, I think the community have a different voice. They think that especially called the VC coin. Yeah, I think we heard a lot of different voice, a lot of skepticism from the community. The people blame the VC-backed token. People think that you have lower FDV and small circulation with high, I think, high FDV when listed. So our the question is, how do you think? What's your perspective of this voice we call VC coin, and how should VC redefine the value, value, and how they deal with the relation between VCs, projects, and communities? Let's come to Alan.
Yeah, so I have to speak about this from both as an operator who raised from VC and also invest in projects. I think first of all, I think I really don't like the whole definition about VC coin versus other type of coins. The way I think about the core essence of Web3 is what we call stakeholder capitalism, right? It's about you having a stake. I think we just have Suji talking about the revolutions, or how it can overthrow a government to a certain degree. It's always about stakeholder, and I think this is the most important thing. So in the early days, you get involved with stakeholder through ICO, and then maybe I think a lot of us forget there's a platform who came back called CoinList, right? Which were really popular. Everyone was trying to fight for allocation on CoinList back then, and then people were doing meme coin last year, and then VZ has always existed from the day one of it, even through the early days of Ethereum till the very recent movement. The way I look at it is just a way to participate, to become a stakeholder. And if you think from a founder perspective, pitching VZ is pretty painful, to be honest, right? Like most people, first of all, don't even reply your Telegram, right? And even the reply your Telegram is really hard to get a feedback or get on a call. And then you're probably 90% of the time you're going from rejection to rejection, or simply people are ignoring you. Then you will think to yourself, it's like, why all these smart people are still bothering going to VC? Is it because to validate the idea or getting product market fit? No, not really. As an operator, I can tell you, operator definitely knows 10 times better than VCs about product market fit, because we're the one that's dealing with Google Analytics and dashboards and users saying no, funnel drop off and things like that. Most VC actually follow trends, right? Like, oh, AI is hot, certain thing is hot, certain thing is not. But the reason you're getting that is because VC a really good way to will really dramatically reduce your cost for publishing. For example, you have an awesome cap table. It's a great way to get publishing. For example, I was recently in Andreessen's speed run in San Francisco. I've been going to speed run every single year. Or I'm not sure if you guys were in YC like a couple of weeks ago. I was there. Similar situation. Why this proven founder willing to give a big chunk of their company to YC or Andreessen? It's because of publishing. Because you got seen by everybody. It's an easy way for you to do BD. Your team can carry on that kind of trustworthiness and legacy and things like that. So I actually think that it's not about VC coin or non-VC coin. I think the way projects should ask themselves is, could VC do something for you, right? And it goes back to your point about value. For example, if you want to break into America, you want to get in touch with exchanges. If you want to list in Hashkey, then maybe getting money from Xiao Xiao is a great idea, right? So I think if you want to get to Korea, you probably need somebody's help. But why would they help you? They need to have something. And of course, they're gonna, if they're good at helping you, they should not pay the same price retail is paying, right? Which simply want to flip their tokens, right? So I think it's very simple, just economic designs, and you need to be very clear of what you want to get, and just and I think user just need to be clear, as in, there is certain validation on the team or on the direction. This is what usually what VC provides, right? Like, this is generally a good team. This is a worthy cause to work on. But is it going to be successful? If you look at the portfolio, I'm LP of many VCs. If you look at the portfolio exit ratio, it's still a typical venture rate, I would say, right? There's no magic behind, I would say, the investment memo or IC calculation. They are also trying to make their calculated bets, right? So I think that's my answer to this question.
Thanks, Alan. Yeah, in Alan's perspective, that we see currently more like a baby sister to the entrepreneurs and startups. So let's come to Xiao Xiao, which Hashkey well known as the early supporter of Ethereum. How do you think the role of current waves will Hashkey?
Yeah, I think the biggest value that VCs can bring is that we can help the startup to grow bigger or help them to scale. In this cycle, especially where meme coin is very popular, you can see that a lot of platforms or tools, they seize the opportunity and build their product and earn the first batch of revenue, or or maybe become cash positive already. But it's quite easy for them to grow from 0 to 1, or to build the product and to go to the market at the first place. But if you want to grow bigger, first of all, you will need resources. You will understand the whole market instead of the niche sectors you are working on. So many founders, they know what they are doing, they know their sectors, and they know their competitors, but they don't know what's the market are looking at or what's the other ecosystem are doing. So this is what VC can educate them, because we have like bigger, like a whole picture of the market. And the second thing is that from 0 to 1, probably you only need money or an opportunity. But from 1 to 10 or 1 to 100, probably you need more like branding endorsement or confidence that more people can trust you. So this is the value add of VC. And also, yeah, in the real life, you can see that many of the like meme platform, even they are cash positive, if they want to continue their business, some of them are already like reaching out to VC and seeking for some help or advice. So this is what we can do to help them to scale their business, or help them to launch in a new market. Especially in our portfolio, we have like almost half of our portfolios are from Western market, like US or Europe. They really, they know Asian market is very active. There's a whole bunch of users or institutions or a lot of like a volume to that they want, but they don't know how to get into this market, and they don't know the mindset of Asian people. So this is what we can bring them, our insight of a brand new market for them. Yeah, so these kind of things are cannot be contributed only by community. It needs to be contributed by VC or institutional investors.
Thank you, Xiaoxiao. Kelvin, how do you think?
Yeah, so I pretty much agree to Alan and Xiaoxiao's remarks. I do want to share my thought on like the VC coin term, because I do feel quite strongly about it. I think in this sense, like VC is kind of seen as a scapegoat. Well, I understand, retail users are tired of being like quote unquote dumped on or whatnot. Well, I gotta admit, there might be some questionable behaviors from, alignment standpoint, when it comes to some of these stakeholders within the industry. I think VC is here for a reason. First of all, it is our job to do deep DD on projects. It is also our job to have skin in the game, to hold it for 4 years, 1 + 3 for vesting term, right? I don't know who needs to hear this, but if VCs and liquid funds are not here, the token is gonna dump, because who's gonna buy it? So yeah, VCs as well as liquid funds, MMs, everyone here is for a reason. I think Alan also raised a pretty good point earlier, and that is VCs are actually used as like a signaling use case as well, right? A lot of people see, big VCs branding. You have to understand, not a lot of retail investors are that sophisticated. They don't do a lot of DD. They rely on VCs. They rely on KOLs to do their job and then follow them to invest in certain things, right? Our job is to take risks, to make bets into high-risk investments, early stage investment into new ideas. Hopefully that will work out, and everyone will be able to, reap rewards out of this, right? So I think it's something that everyone needs to acknowledge before pointing the finger at VC, liquid fund, or whoever, and saying that it's all their fault that I'm losing money. Well, that's my view. I also very much agree with Xiaoxiao's remark. I think VCs bring unique value propositions as well. Be it distribution, be it go-to-market, be it tokenomics, planning, strategies, help with listing, right? Not just passive capital. We can also provide capital to bootstrap your protocol as well, right? New protocols need a lot of liquidity. For example, DEX, perp DEXs, they need liquidity, right? Capital, they need capital, and VC is like the best place to obtain that. So yeah, that's my thought on, VC coin term, as well as like how people view VCs. I think moving forward, we need to find a middle ground, right? I think we're trending towards the right direction, and that is, you want VCs, but you also want, community. That's why you have platforms like CoinList, you have like Echo, you have Legion, right? You want both VCs as well as retail investors who are willing to put skin in the game and also go through the same vesting schedule and see the growth and provide value together. That's my view.
Thank you. Excellent insights. And it's clear that community is more and more important, but I think with year by year, cycle by cycle, VC is the one always stand with you, the builders, and I also believe that with the coming waves, VC will play a more important role, and like co-builders not only give financial support, but also some community, some press release, and also some different kind of relations to the startups. So let's come to the next topic. The topic 2 is about regulatory, and with time on we find that the regulatory trends and more and more affect the VC's investment strategy. Especially these 2 years, we find that Hong Kong promotes one by one welcoming policies, while the uncertain for the US policies. So our problem is, our question is about how do these contrasting scenarios impact VC's investment strategy, and how does the regulatory uncertainty of US and the impact the VC's global investment network? I think this is the first question. Let's come to Alan.
You mean just Hong Kong or US?
Both.
Both, right? Well, I think certainly. I think there's a couple of aspects looking at it. Obviously, I think back in 2023, the reason, if you look at like late 2022, 2023, the reason like the whole SAFE plus token warrant thing become a little bit like a mainstream or standard in America is because people trying to, not really because they're interested in the equity piece or they think the equity piece would actually get listed in NASDAQ, but simply because it's a workaround to the regulatory, framework. And now obviously I think, with the most of the, I would say, case or, class act being dropped in America, then we're going to see a comeback of more pure token style things, right? I think the CoinList one is a great example. We're going to see a lot more fun thing, maybe more ICO type of things, which might be also hot fix to some of the VC scenario too, or a pure meme coin scenario too, like something like a hybrid mechanics. So I think a loose regulation is always great because I think, too tight, you can really innovate. And most of the regulators do not really understand this. Second of all, I think on the regulation side, I don't think that regulation in short term would, I would say, make the environment much easier for operator. maybe in America, yes, because people now can go back to America instead of living in Puerto Rico. You know, you no longer need to sacrifice your lifestyle. But I mean, Hong Kong is pretty good lifestyle, and honestly, also nobody really give a shit about what Hong Kong regulator have to say. You know, everyone want to know what America has to say. You know, everyone else just follow America, right? So I think it's kind of like the realistic perspective there. But I think what really the regulation change has brought forward, I personally seen is opening up the upper funnel for talents. So I think talent is a very important concept here in our industry. I think what's worse during every single bear market, like I personally hated the whole, you know, like 2-year, 3-year so-called bull cycle and a 1-year like bear cycle. The whole thing is every single time when we have huge bursts, a lot of really good talent who just went through the 0 to 1 left the industry. And they don't come back. They went to AI now, probably. A couple of years ago, they were probably in biotech. And that really hurt the industry. And also, like, you know, for a period of time, when I go to coffee shop, people ask me what I do. I say I do technology. I don't tell them I do crypto, right? For maybe a year or two. So I think that's the situation. It's like, you know, the whole industry or the premises for VC is talent. That is at the core of everything. Exceptional talent that drive exceptional or even impossible outcomes, right? And I think regulation is important because, you know, if you're a really good talent, you have options, you have choices. Why should you come to Web3? If it's demonized or if there's a ring of terror against crypto, then obviously I don't want to tell my wife that I want to take the risk. My wife will worry about it, right? If I'm a talent engineer or developer or AI researcher or anything like that. So I think the biggest thing that I'm hoping to see this whole regulation change, apart from the very obvious one like capital inflow, like Wall Street embracing it, maybe a crypto company going IPO, equity will finally have some value maybe over the next 5 years because we're going to see 50 more IPO and M&A. But I think the core is always the long-term thesis for investment is talent, right? So if we can see a lot more talent coming into our industry just because now is in the whites and under the sunlights, then I think it will be really great for the industry to develop, regardless you're an investor, operator, or anyone else's, right? Or just a token holder.
Thank you, Alan Q. I'm from Amber Group, and we just have a SPAC deal, and our sub-business line, assets management, we call the Amber Premium, just rebuilding last.
Congratulations, $1 billion market cap.
Thank you. I think that I think coming days there might. I heard a rumor that there are more than 10 deals will have our crypto company has an IPO or SPAC or that kind of deal listed on Nasdaq maybe in 2025. So I think that I think with the Trump's policy, they give us some new opportunities to exit, especially for VCs, and also for I think it's new opportunities to the entrepreneurs. Let's come to Xiaoxiao. I think that our topic is around the application. Recently, I think TikTok and some also, as Suji mentioned, social is the kind of revolution. So how do you think, and also one topic is that massive adoption, that we want to reach more and more customers, users. So how do I remember you just mentioned that half of your deals is from Western countries like US or Europe. So how do you think the regulation change the impact your investment policy, investment strategies or methodologies?
I can share some interesting observations within our portfolio. So before the US election, many portfolio they're really hesitating whether to issue a token or whether to launch a token, because the regulation, the policy is like uncertain, especially for those application projects. They even hesitating whether to go to the US market and to acquire users from there, because they are not very sure about whether they are doing like active marketing of token. So this will really have impact on our investment preference. So if we are always in this environment, we will prefer to invest in infrastructure, like U.S. infrastructures projects rather than U.S. application projects, because for infrastructures, they can say that they're doing technology research, they are staying technology neutral. They are not like selling tokens or like doing active marketing. So, but after Trump on boards, a lot of things change. So all of these portfolio, they're very actively looking into tokenomics and having a very clear plan to issue token and very clear plan to for listing. So things really change, and our investment thesis will really depends on regulation. But the real problem is not the regulation itself, it's really the uncertainty of regulation. If you know clearly how or where to go and what to do is under the compliance framework, you will just follow it. For example, like this year, everyone is expecting the positive policy about stable coins coming out this year. So a lot of like stable coin projects coming out and raising money in this market. So if the regulation is clear, even it's very strict, the startups will know how to solve the compliance problem. And for VC, it's also a positive signal. So yeah, the short answer is regulation really have influence on our investment thesis, but it's not the deal breaker or something. Yeah.
Thanks, Xiaoxiao. And I think the Spartan Group play a very important role, bridge the East and Western. So how do you think, Kelvin, was that any impact to your thesis?
Yeah, so I think it's a good thing that there are clear regulations, there are better guidelines as to how people should navigate the industry, how people should invest, what's legal, what's illegal. I think it's good. I agree to Alan's point earlier. I think everyone looks at the US, right? I think it's very evidential that after Trump got on, under his administration, a lot more people are it's a lot more lenient when it comes to getting tokens out. Prior to his administration, a lot of people are like very cautious. Like, oh, is this going to be considered as security? A lot of them will consider, oh, whether I should turn on the fee switch, right? But afterwards, I think, especially this year, we're seeing a lot of portfolio companies starting to explore the idea of putting out a token, sharing revenue with users. And this actually helps tokenomics in general, because it actually helps accrue value to the token itself. Protocols that are making money could share the money, share the revenue to the holders. I think overall it's a very good thing. Now, moving to Asia, I think Hong Kong specifically, I think Hong Kong is trending towards the right direction. I think it's very much a consensus that in the crypto industry, US has the builders and Asia has the users. And the builder community in Asia reminds me of 2017, 2018 crypto in the US crypto. So there are a lot of like builders, a lot of like weird projects, but over time they managed to get high quality projects out, high quality builders, right? And I see Asia moving the right direction as well. We see a lot of successful entrepreneurs, a lot of good founders coming out of China, Southeast Asia region, some even from Hong Kong as well. So we're actively, looking into this region. I think there's a lot of growth when it comes to builder in this space. And more importantly, I think users are here, mind shares are here. And, we don't lack that in Asia. So yeah, overall, I think Asia's trending towards the right direction. Clear regulation in the US side will certainly help the case. So yeah, very optimistic about investing in Asia in general.
Thank you. I think the topic of regulatory is quite heavy, so let's come to the last topic, the fusion of AI and crypto. I think the voice of AI integration with crypto, I think since 2022, with the launch of ChatGPT. And I think the first wave of AI integrated with crypto is use the integrated the SDK. Then we find the second way is we find some AI agent and AI agent meme, and also I just forgot the computing power or the GPU infra. And I think recent days there are also some new thing launched like MCP. Yeah, MCP. So, as I know, both EVG and Hashkey and Spartan have many portfolios of AI, AIX crypto. So, can you guys share us how do you evaluate the target or the candidate projects, and what do you think the thesis of AIX crypto, and what you can do, what you will do in the coming waves of the AI application? So let's start with Alan.
Yeah. Actually, we have AI is one of the area we have not been very successful in finding good targets. Like it's one of the area I give a lot of shit to my team. We've looked at, I don't know, like something like 240 so far, and then we haven't approved one. That's the biggest issue. Obviously, we could approve something that's just because your website called .ai and we pretend that it's an AI project, or you can be a little bit more first principle in thinking what AI is going to play a role here. I think Suji's map was interesting, right? If you look at that, it's like, oh, AI increased productivity, and then, but Web3 regulates this the production relationship between user data and also the AI productivity. And I think, but this is honestly much easier to, I would say, said and done. I would say, like, it's really hard to execute them if you actually build product. Like we were building something AI, but it's like super difficult. It takes a lot of money, and then it takes a lot of process to go through things. If you're actually trying to create a new paradigm, obviously you can just use AI for efficiency gains. Like I'm sure every one of you are using that. Like we internally last year successfully laid off like 25% engineers, not because the performance, is because like the AI lab we started in 2023 has increased the overall productivity by about 40%. So this year our goal is to reduce another 25%, but also beat the outputs, because we track all the line of code, we track like how many iterations we got. Like I ran out of an app that checks basically everybody who, whether they write the codes, whether they got reviewed it, whether it gets to certain things. So I think from actual efficiency perspective, AI is doing so much for an organization. Obviously you can invest in those, but I think if you want to invest in anything that actually, like what Suji wrote, the bigger ideal, I think it's going to take a period of time, because I think even AI is finding its own identity at the moment. Like I was in GDC for a week, right? I can tell right now, AI company in equity has higher multiples than Web3. Right now, if you're Silicon Valley, you're doing, let's say you're a verticalized AI application company, you can raise probably a 70 times to 100 times in ARR. That's on your top line, ARR, right? And this before your server cost, basically your gross revenue. And how much Coinbase is trading at right now? 7 times PE, right? So I would say right now, like, if you really think about doing something seriously AI, or you do have the expertise, you might as well want to do clear cut just to work on that. If you want to be very Web3, you got to really think fundamentally what kind of problem AI could solve from Web3. The proposal we really dislike is the one that's trying to just put a bunch of keywords together, pretending it's something that exists, and just get our logo to sell the story, right? Like those things, I don't really look at it as a sincere builder that you want to get involved with, where you want to back.
Thank you, Alan. And let's come to Xiaoxiao. Once we were colleagues, I learned that Hashkey Capital have a very deep insight around AIX crypto. So what's going on? How do you think right now?
Yeah, I want to share Kaito, but yeah, to be honest, I think at this moment, AI and crypto are not really like merge with each other because we can see that the current use cases are only like very light integration with each other. For example, like blockchain startups, they use AI as a tool and as a accelerator of efficiency. And for AI startups, maybe blockchain or token, they can add an incentive layer on top of the existing product. But to be honest, I think it's still early for AI models or agent to understand the logic of blockchain. Especially there is a lot of risk or a security issue on chain, and even the real people, we don't understand it very completely. So I think it's still very hard for agent to do real things or like with real capital on chain. So I think the most of the AI crypto AI product, they are only like a user of AI or probably a user of blockchain. So our investment thesis is that if it's an AI project plus blockchain or token incentive layer, we will evaluate it as an AI product. If it's a blockchain startup using AI, then we will just evaluate it as a blockchain startup. Yeah, it's very easy. Yeah.
Thank you. Calvin?
Yeah, I pretty much agree to what both them what they just said. I think crypto AI is in a weird spot right now. I think there's a reason why crypto AI has been quote unquote underperforming. It's because Web2 AI has been doing very well. Like Web2 AI is just so far more superior. And do you actually need a token along with the idea of using AI? I think that's, debatable. When it comes to specific investments, I'm still trying to wrap my head around why do agents need a token, right? And it's okay not to have a token, right? I personally am more inclined to invest in something that is in the combination of DePIN as well as AI, right? So to Yukun's point earlier, I think something like share GPU, right? And then like what Xiao's point, using crypto as an incentive layer, right? To get users to share data, share GPU, right? I think that makes a lot of sense, right? AI that utilize like these shared GPU, and then that revenue will go to like these people who are sharing their GPU as well as their data. I think that makes a lot more sense than just churning out an agent and then that agent has a token with it. I think when it comes to AI crypto, everyone needs to go back to fundamentals and really think like, why does it make sense to have crypto attached to that specific AI protocol? So yeah, I think these are some areas to look out for. And like I mentioned, I think within AI, the intersection between AI and DePIN would be the best when it comes to getting good value and seeing more of a synergy between two verticals. Yeah.
Thank you. Time flies. I think we had to had to close. So I remember I read the post from Rishan today's Twitter. He says that old guys say goodbye, new guys say hi. Yeah, it's very interesting. Actually, this is the 10th year of when I come to crypto industry. I think every year, every cycle has something new, and every time have something disappears. So we think that maybe we call it a new paradigm or new thesis. I think it's very ordinary and like the community, like the regulatory, like the newly technologies like AI. Yeah, I think everything's okay. I remember words also from a movie said wars come and go, but my soldiers stay eternal. I think this is both to our VCs and to our entrepreneurs. Well, thank you. Thanks to our panelists and thanks to the audience to join us. Until next time, take care. Thank you.